We are continuing to see house prices drop.
It's dropping. It's dropping fast.
And I know a lot of you guys are asking, Orlando, is this a buyer's market or is this still a seller's market? We're gonna jump right into that. My name is Orlando and welcome to the channel, the great real estate tumble of 2022. We now have a triple whammy in 2022. In addition to stocks and bond market volatility woes, housing just delivered its worst 2-month hit since 2008 and wiped out over a year's worth of gains. Now, what does this mean? Hopefully you haven't been sleeping underneath a rock, but the Fed has continued to raise rates. And what has this done? This has dampened and stopped demand from individuals jumping into the housing market. Some of them have actually been disqualified from jumping into the housing market. Because their buying power has decreased. As we always talk about on this channel, a 2% increase, guys, will decrease your buying power by $200,000. So 1% equals a $100,000 decrease. And we have seen interest rates drop from 7% to 6%. So if you could afford a $500,000 home, now you can afford a $6,000 home because of the decrease. But here's the thing. Most people can't afford at a 7% interest rate. They need to be in the 3-4% range even to afford a home. And so this is a big thing. And this is where you're seeing the decrease in tons of price cuts. And this is the reason why it's so important to look at history. So what does history tell us is going to happen with the housing market? A sideways housing market for years, as the chart above shows, prices declined 7% in the last half of 1979 and a largely traded sideways until late 1982 as the Federal Reserve continued its war on high inflation with tight monetary policies. If we look at the chart, we can see here, based on the article below, like it said, you can see here that values basically went sideways for a second here, dipped, and then kind of went back up while the Fed was fighting inflation back then. But before we get to that, 82% of you guys watching this video have not subscribed. Please hit that subscribe button. It really does help the community grow and my channel grow. And we want more people to see this content. Then it says it's continued material and labor shortages. Taking on fixer-uppers will be expensive and time consuming due to pandemic shortages and rising labor costs. A fully remodeled property will be easier to sell regardless of location. Now, guys, listen. I did a video on this about what's going on with the fixer-upper market. We are starting to see people who wanted to get into the fix and flip game. It's going to be a lot harder for individuals. If you are a fixer-upper, please put in the comment section your experience of what's going on right now. And the community would love to hear exactly how hard it is to sell or how easy it is to sell a fixer-upper in this current market. But overall, I did a video that said that it's going to be harder, especially for mom and pops, especially when corporations like Zillow and Open Door are having a very hard time fixing, flipping properties when properties are going down, the demand is down, and costs of material are high. So with that being said, does that mean that more properties and more inventory will come on the market? I believe so, especially with the recession coming. With all of these things, well, you know, we actually are in a recession. But based on the government's definition now, we have not gotten into a recession, but we have had 2 consecutive quarters of negative GDP growth, which was the old definition. But however you look at if we're in a recession or not, regardless of that point, prices are being dropped and sellers have to continue to drop prices. I am telling you guys, the more and more the Fed continues to raise rates, the more and more we have inflation eating away at everything, because I know inflation is going down. I know some of you guys are going to say, Orlando, I don't know what you're talking about. Inflation is going down. And yes, that may be true, but how much really did it go down? It didn't get cut in half. It's not 75% down. It just went down point something percent. It went down from 9.1 to 8.5. I mean, that's still high. So regardless, we are still getting ate up by those things. And to be honest with you, that is the CPI report. I can almost promise you, if we look at the real inflation numbers, they are through the roof. And here's the thing, guys. We're no longer in a seller's market, but we're also not in a buyer's market right now. So I know what you guys are thinking. Buyers are like,
Oh, Orlando, come on. If we're not in a seller's market, then we have to be in a buyer's market.
and that isn't true. We're in a middle ground. It's kind of like a no man's land where we're out of where sellers can do whatever they want. They can overcharge you. They can still do that, but the demand is no longer there. But we are getting price cuts, but things are still unaffordable. Prices are still high. Remember, sellers are cutting prices because they have to cut prices because the demand isn't there, but they're cutting prices at an overvalue. So they're cutting prices from, $500,000 to $425,000, but it's still overpriced. So that necessarily doesn't put you in a buyer's market when it is still unaffordable. We need prices to continue to drop down. And remember, guys, remember, we're just at the beginning. We haven't even hit winter or fall yet. We're just getting to the end of summer, so you have to have patience. And what evidence do I have of these ridiculous price cuts? I know some people in my comment section says, Orlando, is not happening in my area. There's no price cuts in my area. I get tons of those comments, and I have to say, remember, let's calm down. Real estate and housing is based on your location. Something that's happening in Houston will not happen in LA. Something that's happening in Chicago will not be happening in Miami. Real estate and housing just in general is extremely local based on your area, guys. But here's just some examples of what I'm talking about when it comes to price cuts. Home sales down, price reductions are up as Bay Area housing market cools. The Bay Area housing continues to cool with new data from Compass showing that price reductions in the region are up nearly 200%. Guys, this is no joke. In some areas, amount of price reductions are up hugely. Look in your local market to see exactly what's going on. That's in contrast to last year's incredible hot real estate boom fueled by pandemic buyers' desire for more space coupled with low interest rates. Interest rates have almost doubled. You hear that, guys? Doubled. Since July of 2021, overall home sales are down 38% from last year. Meanwhile, the new report from the real estate brokerage shows the home appreciation rates have plunged this summer. The percent of homes that sold for over asking has also come way down, with 57% of sales closed over the final asking price, down from 73% in April, guys. The data isn't lying that we are going somewhere that we haven't been in the last 2 years. Remember, a couple of years ago, we were continuing to get pushed out of the housing market. So if we're starting to see these mass drops in price reductions in areas like the Bay Area, what could possibly happen in a smaller area, a smaller market, a market with a smaller population, not a market that is, superly overexpensive like the Bay Area, but in your market. But remember, you have to look. I say it all the time. These houses will not just fall in your lap. If you're looking for investment properties, if you're looking for a primary home, if you're looking for any type of real estate, you have to go looking for it, guys. That is a must. What I'm saying all in all is, guys, is that at the end of the day, if this is just the start of what's going on in the housing market with price cuts, with everything kind of going down by triple numbers in some aspects. What do you think is going to happen when we full-fledged hit a recession, when jobs start getting cut, when things get really, really tight? What do you think is going to happen in the housing market? The next 6 months, I believe, is going to be extremely pinnacle, and I am very interested to see what's going to happen, but it's not looking good for home prices. They look like they're going to continue to go down, down, and down. Interest rates continue to go up and up and up, which will calm demand. Once again, I want you guys to remember one thing. With interest rates going up, values have to come down, guys. And I've been saying that since 6, 8, 9, 10 months ago, that if interest rates go up, values on real estate go down. That goes for housing, investment properties, real estate in general. So once again, guys, I hope you got value out of this content. I'm gonna need you to watch this next video here. It will help you learn everything about this crazy housing market and also jump into your first rental property. Check in the description below. I have some useful links to jump into our membership program and also get your free credit report. See you on the next one. Thanks.